Good day traders, Rich Jacobs here and welcome to episode 5 in our Underdog Trader Education channel for 2018. As we head into a new week, for the week starting 15th of Jan 2018, I thought let's kick off with looking at the top 40 but reflecting a bit on what we've seen in the past week and just looking at the broader structure. We're still sort of operating within that same framework which we've been highlighting over the past week, which is break of structure to the downside on this daily chart of the top 40, retracement back up into this previous structure, and then you can see for the past probably 5-6 days we've really just been consolidating over here and operating within a very relatively tight, I shouldn't say very, relatively tight range. And you can actually see it reflected on our ATR, our average true range, which is our measure of volatility, as we see it ticking down over the past few days. I'm just sticking with that for a second. In absolute terms, still at decent levels above its 50-day moving average, but it has been ticking down over the past few days just to reflect that sideways consolidation that we're seeing over there. And really trading or intraday trading's been relatively tight over the past few days because of this consolidation. If we just look at what's been happening on the results side in our trading room, where we do intraday trading on a 15-minute chart. That's our equity curve for the year to date, and you can see over the past week on a standard weighting basis we're actually down 846 points, which is reflected in this red curve over here. But one of the things you'll also recall is that when we identify these areas of consolidation or consolidation days, we place our trades or bias our trades to either very small sizes or actually stepping aside. In our case, a lot of it on these C days, we actually stepped aside and we traded what we call null values. In other words, we didn't trade those trades. So over the past week we lost about 130 points, which is why our weighted equity curve is still looking very positive for January, sitting at positive 1,183 points versus the positive 182 points had we standard weighted or had we adopted a static size to each of our trades during this year. So pretty happy in terms of our analysis so far and our ability to identify these areas of consolidation at an early stage so we can avoid overexposing ourselves in range bound markets. And just as I talk a bit about where we're going to from here, well, in the context of that, if we look at the look at what's been happening in our market on the 15-minute charts, really here you can see the range bound effect. Just zooming out over here as the market moves sideways, very messy, higher highs, higher lows, lower highs, lower lows, higher lows, lower highs. It's all over the place. But just in the last trading session, what we saw was the market then pushed up again, put in a retracement. This is kind of important over here, because what we saw over here was a break above and a close above this previous structure high over here, something we hadn't seen. Remember what I highlighted to you guys was the market hit that 50, around about that 53,300 level once, tested it again, and then finally we get a break, and then the market pulled back or retraced, and then we saw it follow through to the upside. So looking a bit more bullish here, and you can really see it reflected on this daily chart as well, as the market puts in a higher high, higher close. So we are anticipating some kind of a range opening up over here. Just purely looking at the structure, the short-term trend is certainly to the upside. You can see, I mean, we're breaking in to the upside over here. We're putting in higher highs, higher closes, so that's indicative of further short-term potential upside within the broader framework. We are still trending to the downside, and this would be regarded as a retracement within a downside, within a downtrend. And what's going to be interesting to see is if the market can firstly push through that 61.8 level, and then we'd have our eyes on that 78.6 Fibonacci retracement leg of this level of this leg of the move over here. Why is that significant? Well, firstly, the 7866, is significant to us because what we found was when markets push or retrace so deeply that they sort of close within this zone over here, there's a greater likelihood that we're going to actually see not a retracement or continuation move, but actually a break to the upside, a break of this structure over here. Which would be the all-time highs for our markets as well. So that's going to be interesting to see if it's got the momentum to push to the upside. What would be indicative for us of that being potentially on the cards? Well, let me just save that and let me pull up a chart of the. Oh, that's the 4-hour chart of the S&P in the US, and we can see things are still looking very, very strong over there. The market's continuing to push to the upside, putting in higher highs on and higher closes on a lot of individual 4-hour candles. So very strong momentum to the upside over there. It's approaching the 2800 mark, and that's going to be interesting to see if the market, if we see some consolidation setting in there, should the market hit those levels at that nice round number. So that's something to eyeball. But it's, we've still got some 12 points of upside over there before we get to the top. So, it plays in line with our view that maybe we're still seeing some short-term upside on the cards. And then the other huge factor in our local top 40 market is the Rand dollar. And what's interesting here is we still remain, let's just see. Yeah, well, I mean, we're pretty much still staying within these parameters over here. Markets pushing to the downside over there. So we saw the strong move strengthening the currency, and then the sideways consolidation. That sideways consolidation remains. We're just going to extend it a bit, but really we're still extending sideways over there. But the market is fairly it has made a fairly strong move. You could argue that it's worked off a lot of its overbought condition over here, but should we see some kind of a pop, in other words the market moving to the upside, some kind of a break of structure to the upside, that's going to add to the case for there being a further strengthening of our top 40 as well via the impact on our Rand hedge stocks. So the currency is going to be an important thing to watch over the coming week. It's been going sideways for pretty much most of this year so far, but certainly if we see any directional bias, we're going to have to say, if it goes to if the currency continues to strengthen, puts in some kind of a strengthening move based off, for example, either, well, for the most part, it's probably going to be something political, then we would expect, the start of continuation move to the downside. Another scenario to consider is that we do see that S&P hitting the 2800 mark and then starting to consolidate. If there's confluence between that form of consolidation and a further strengthening of the Rand versus the US dollar, that certainly or almost probably will tip things in terms of a continuation move to the downside. So really there's an element of this market could move in either direction at this particular point in time, and it's definitely something that we need to monitor closely over the coming week. In the short term, as I said, we've got this we've got a short-term upside bias. The market's breaking structure to the upside, so just bear that in mind as well. Right, so that's what's happening on the local markets. Let's have a look at some of the international markets in terms of our offshore challenge, which for those of you who haven't been following, it's basically a challenge that I set in my own personal account this year, which is to take £10,000 and effectively trade a basket of currency pairs, the S&P, as well as two commodities in the form of gold and oil. Trade those on a rolling portfolio basis to see how it plays out, purely on the basis of price structure, using all the techniques that we've taught in the past in terms of our Underdog Trader Development Program and all the things that we speak about in these recordings in terms of understanding price structure and using price structure in our trading. So let's have a look at what's been happening on that front and look at if there are any opportunities for us there as well. Right, so this is where we are year to date. We've ended 18 trades, 9 winners, 9 losers, so 50% win rate. We've got 2 open positions, which I'll run through in a minute, and we're operating at an average reward to risk of 2.14 to 1, which is pretty decent. Has to be said, these are only 18 trades though, so not statistically significant at all yet. This is what the equity curve looks like. We had a good opening session and it sort of chopped along, and we've just broken to the upside again over here. Just looking at some of the trades since our last update, we had that Euro USD trade open, so let's pull that one up. Sorry, this is the Aussie USD, so let's put up that Euro USD one. You recall we got long right here. This market had pushed to the upside. We put in a higher high, higher close over there, retraced, pushed up, put in a higher high, but not a higher close. So we waited for another retracement over here. We got it pulling back all the way down to these levels here. We saw some decent reversal candles. We got involved in the long side. We managed to put our stops just below this this level over here. So very, very small risk that we had running. And then the market pretty much pushed the upside. Bit of a retracement over here as it pulled back to open, but then it popped to the upside and we hit some decent targets over there. In fact, this market is so strong, it's just continuing to push to the upside. In situations like this, yes, you could argue that one could put some kind of a trailing stop on your trade. In our case, for now, what we're going to do is we're only trading 1 unit or 1 mini contract of each pair. Once we reach a point further down the road where I'll call it our bankroll increases, we may consider trading 2 units and maybe letting one of them run with a trailing stop. But at the moment, this is a nice trade. We closed it out. I think we netted something like about £90 on that trade. Another one which worked in our favor was the USD franc that was on the short side. Let's have a look at that one. And again, we got short. We had this push to the downside over here. Market retraced back up. We actually got short on this candle over here. As you can see by that, that's hidden behind the line, but there's our short signal over there. We got short in that zone, had our stops in above the swing high, and then we just simply pushed to the downside again, hitting targets nicely. So again, decent trade for us, and we netted about £60 on that one. So 2 decent trades to close out, and then we had 2 new ones which are still open. First one is a pound yen long, and let's have a look at that one, how and why we got involved in that one. Pound yen, here we go. This is actually our 3rd bite of this one, and that's another important thing. When you're trading structure like this, you got to define what your rules are, whether or not you're willing to re-enter trades should you get stopped out, and you got to have tested those scenarios, back tested them, and be comfortable with your approach to it. In our case, we had this push to the upside, break of structure to the upside over there. Market came in, put in a retracement. We actually got long here, got stopped out. Market pushed down. This is unfortunate. We got long again and then just got flushed out over here. And then, but in terms of our rules, we're allowed to re-enter again. So we got long again, and the market's now popped to the upside. We're looking pretty solid at the moment, putting in nice higher highs and higher closes. So we've rolled our stop up a bit to about, in this case, the 150.6 level. We got in at 150.649. So we've pretty much eliminated most of our risk. Is down to about £3, and our upside is something like £200 or £197. So this is a very nice trade for us in terms of how it's playing out at the moment. The other one we got involved in was the Euro pound short. Let's have a look at that one. See the Sunday evening markets have just opened over here on the forex side, so you may see some movement as we go along. Yeah, we were looking for that short market that pushed to the downside over here, retraced. We actually got short for the first time over here and got flushed out. When we get flushed out, and that's why it's important to me to be flexible. Flexible is the wrong word. I like to keep my stops tight so that if the market does move against us, it takes us out quickly. We lose the minimum, and then we rather look for new and fresh opportunities to get involved in a trade. So this is a typical example. We get short here as it popped to the upside. We just got stopped out. We move on, push to the upside. We had another potential reversal over here. That's on Friday. We did get involved to the short side. It's pushed down. It's in a bit of consolidation at the moment, so it's in the money, but not by a heck of a lot. And we're really looking for it to push down towards that target zone over there. Our risk reward decent as well, risking about 39.90 to make 86.10, so pretty comfortable with that as well. So those are two open positions opportunities. Two of them to highlight. Euro pound, euro yen is the first one that I flagged over here. So these are not trades that we're involved in yet, but we could potentially get involved in it within the next day. And this is a nice clean one. Market and putting in a series of higher highs and higher closes over here, trending to the upside. Then we got that rollover and break of structure to the downside playing out over here. Now we're seeing a retracement back up into structure, and what we're looking for is an opportunity to get short here. And should we get short here, or get some kind of a signal that we can go short here, we'd put our stops in above the swing high, and we'd look for a continuation move to the downside over here. Given the depth of the retracement back up into the 61.8, hopefully that will present a very good reward to risk. Recall the other thing that I spoke about earlier when we were looking at the top 40. If we see the market pushing into that 78.6 zone, or the zone between the 78.6 and 100%, we'll probably stand aside for a bit and wait for it to come back before trying to get too excited in terms of continuation move to the downside. And that's simply because there's an increased probability that we'll see another break of structure to the upside playing out if the market does push into this zone over here. So that's one opportunity on the radar you guys might want to flag. Another one is on the USD CAD. That's the USD Canadian dollar. So let's pull that chart up. So a bit of an interesting one. I mean, this thing was trending to the downside for the most part. Boom, boom, boom. Lower lows, lower closes. Then we had this push to the upside over here. We actually got involved in a shorting opportunity over here, quite a tight little one, where we were looking for continuation move to the downside, but that didn't really play out. Market popped to the upside and stopped us out. Instead, what we saw is a break of this previous little shelf of structure over here with a higher close up there, and now we're regarding this as a potential for a long trade as this market retraces back into structure. So we're looking for some kind of opportunity to get long here and try to ride it back up to the swing high. So a very simplistic approach to trading, and I think that's part of the appeal of why I wanted to do this challenge, which was to prove over an extended period of time and in a live environment. I mean, I've backtested a lot of these things, but I'm trading this in a live environment just to demonstrate to you guys, or hopefully demonstrate to you guys, that if you apply, you don't have to be what's the word I'm looking for? You don't have to use complicated systems, complicated rules in terms of approaching your trading. This is just basic price structure, drawing in price structure, understanding price structure, and looking for opportunities to move into positions quickly and get out, and then quickly take small moves within trends and try and generate positive expectancy over an extended period of time. That's the purpose of why we're doing this. So it's going to be interesting, an interesting, call it, experiment for us, also to demonstrate in these live videos over hopefully a year's worth of trading. So I'm looking forward to continue to share that with you, in addition to the work that we're doing on the Underdog private wealth side in terms of our intraday trading. I think I mentioned in one of my earlier videos, but all of this material I'm just putting out there. I think the whole idea is just to share as much as possible in terms of an understanding of price structure in the markets and how we're approaching the markets. It's not something I actually said at the beginning of this year that I want to charge for. I just want to put it out there. If you guys do have any additional questions, please feel free, drop me a line. It's richard@underdoginvestments.co.za. If you like these videos, leave a comment under this video, open up the comments, or leave a like on the video. If you don't like it, leave a dislike, or more constructively leave a comment to say why you don't like it, or if you want me to focus on additional markets. Are there some things that you'd rather we look at or look at in addition to what we're doing? I'm happy to get that feedback and happy to share as much as possible with you guys as well. If you guys are looking for something a bit more advanced in terms of training and deeper understanding of how we approach price structure, again, just drop me that email. We can chat about it. Or if you want to understand a bit more about what we're doing on the Underdog private wealth side in terms of the intraday trading, then you can drop me that line, and I'm happy to share that with you. So yeah, that's pretty much it from our side, and I hope you guys have a good trading week ahead. As always, approach your trading with caution. Don't overexpose yourself, and I hope it's a good week. Cheers.